Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, tractorzoom, delivering insights. If you're looking for a great place to see what's going on in the auction marketplace, use tractorzoom's Iron Comps, 500 individual auction houses that report daily as to what's going on out there, and you can start to see trend lines develop. If you're interested in using that product, use Moving Iron at checkout and get yourself a discount. Also, Arrow CRM. If you're looking for a great tool to help your salespeople sell more stuff, check out Arrow at heyarrow.com. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and Chip's nice enough to come on a couple times a week to talk about what's been going on. Last couple of weeks, Chip and I have been playing schedule tag here. We've been back and forth, both of us being pretty busy with all the stuff going on. And Chip, man, take a look at the outside markets right now. They're getting beat up because it looks like one of China's real estate companies might have actually not been a real thing at all. So how you been, bud?
Yeah, doing well, Casey. It's interesting morning to talk here after a couple week break of a lot of travel, and each of our schedules kind of not coinciding here, but probably a good way to kick back off. We got harvest kind of picking up steam, and the market's trying to figure out are the yields as good as what the USDA has projected, and there's a high amount of variability, and that's what's kind of maybe getting some people thinking maybe that these yields are going to be a little bit disappointing. We had a really hot dry end to the growing season in a lot of areas, even here in the Eastern Corn Belt. And so some disappointment with some of these early corn yields. And that had, a little bit of a bounce built into the markets in here. And then the outside markets, as you mentioned, kind of more in the driver's seat late last week. And then this morning, there's, as you mentioned, a big commercial and residential real estate company in China that announced a week ago they've got some financial problems. They're not going to be able to meet their bond payment, which I believe was scheduled for today, and they officially missed that. So that in my Econ 101 world, that's called a default.
Yep.
And it really has the Asian markets and Chinese markets really getting beat up, 3 to 4% losses here. It's spilled over right now. The Dow Jones futures are down 622 points. Crude oil's down 180. So it's spilled over in just a kind of a general commodity contagion. The dollar's up a couple hundred points. And that's all the excuse they need in the commodity world to sell this thing in the overnight. So they kind of beat things up again. Corn's down a dime, 10.5 on the lows right now. Beans are down 13. Wheat's down 8. All the soft commodities, coffee, sugar, cocoa, getting beat up on the lows right now. And so that's what we're waking up to here to start the week off. And I'm sure that will be some influence here. It's the 20th of September. On the 30th. So next week, late next week, we've got the quarterly stocks report. That's going to be a potential market mover. That's going to give us the final old crop 2020 carryout figures. And so that's a very tough report to try to predict or project. There's a lot of volatility in those quarterly stocks reports, and so that's going to be something along with harvest. It's eventually going to kind of stabilize this market and let people realize that, hey, even with big yields, we've got tight stocks. But right now, the outside markets are for sure overshadowing it. And I wouldn't say it's a crash, but it's certainly a little bit of a panicky feeling, and certainly one of the biggest corrections in the stock market that we've seen really for quite a while. It's not necessarily unhealthy in a lot of ways, but we're at lows we haven't seen since July. We've been kind of making new all-time highs, it seems like, on a weekly basis in the stock market. So put a little bit of a correction in here, and we'll see how far that takes us. And right now, it's all eyes on the outside markets, and unfortunately, it's we're highly correlated right now until something, whether that's the September stocks report or then the October crop report coming out here in a few weeks on the 12th of October, will give us an even better feel for what yields are. So we may be a little bit sloppy and volatile until we get some of these reports out of the way.
Yep. So with the USDA coming out with what they had last month there, or earlier this month, I'm sorry, with the report that came out in the September report, what that looked like, all the traders and I'm trying to say here, speak clearly, case. All right, start over here. All right, so with the report earlier this month that came out, the trade is actually kind of putting all their eggs in the one basket, that basically everything east of Mississippi is going to save the universe here when it comes to corn and beans. I guess as you take a look at what's going on right now with some spotty reports that I've gotten from friends of mine that I've talked to out there, they've either got it really, really good or they're kind of so-so. I mean, it's not like it's dismal by any means, but I've talked with several guys in Illinois where it's very spotty as far as what the big numbers kind of look like, I guess. So I guess as you take a look at what's going on out there, Chip, what's your feel right now for kind of the eggs in one basket approach to the trade here?
Yeah, that's probably a good way of putting it. And I think the key is going to come down to kernel size and test weight, as a lot of times it always does. In the September crop report, they just use kind of historical average ear weights and soybean pod weights. And then on the October report, they actually, physically weigh them. And so it's a much more accurate reflection. Here in the Eastern Corn Belt, it is highly variable. There are pockets that it's best ever. Producers 250, 260, 280 type field averages. But then there's also areas, we had a lot of disease, a lot of black tar spot. We had a lot of wind issues, way more wind downed corn than we've had maybe in 10 years. And it was really a rapid maturity, right? We had a lot of sun, low relative humidity, and we went through stretches here. Even this past weekend was pretty hot. We've had a lot of days well over 90 in August and to start September off here. And it's really maturing the crop rapidly. And I think at the expense of some test weight. And I think a lot of producers, as they get into it, it's not a disaster. So it's hard to gauge this, right? So people saying, yeah, it's okay. It's 220, it's 225. It's maybe not even as good as a year ago, which is still good corn. But the expectations were, as early as we got planted and we had, decent timely rain, that people would be out here, 260 to 280 averages. And it's just not, it's not that. There is some of that out there, but it's highly variable. And in any year, when you have that variability, just, if you listen to this and you're a farmer, you know exactly how this can be. You start down a pass in the combine, it's going really well. Yield monitors pegged, it's great corn. You hit a little stretch where that falls off 100 bushels and your final average drops so quickly, pulls it down so quickly. And I think that's what we're seeing here with, we're not able to just peg it to one issue. There's a lot of things out there, disease, wind. Producers really fought the wind. We got timely rains, but with those rains this year, we had a lot more wind. You guys out there are used to it. You're like, yeah, what's a little, rain, hail and wind come with every rain you get. That's not the way it is here east of the Mississippi. But this year, there was a lot of that, a lot of hail, a lot of rain, and it definitely is affecting yields here. So, to your point, I think that's what the market's trying to figure out. And as tight as the carryout is, just a couple, 2-3 bushel swing one way or the other in corn and a bushel in beans really is a difference maker as far as what the eventual carryout is here. Yep. And so that's kind of the stage we're in, is trying to get this market to figure out, all right, where are we at? What's the yield? Is the USDA close? Do they have to ratchet that down a little bit? And, again, we got a couple big reports on the 30th of that quarterly stock. So that'll tell us the final old crop carryout, which is, you could probably argue, could be a little bit friendly. There were, right ahead of harvest in the days and a couple weeks ahead of harvest starting here, there were ethanol plants that were bidding, from $1.10 to $1.70 over for old crop corn. So it literally kind of felt like we were out of corn almost. All the elevators are, there's no bushels around. All the bins are empty. Elevators are ready to go. And so it's going to be interesting to see what that final carryout is for 2020. And then on October 12th, we kind of dial in that yield just a little bit more. And so the next, 3 or 4 weeks here, we're going to get a lot more information along with some additional harvest information. And, that'll go a long way towards kind of saying, all right, how low do we have to go for a potential harvest low? And B, how high are we going to go on our normal post-harvest bounce? And, in the short run, as you mentioned, and we talked about, the outside markets are going to, kind of dictate things there in the short run while the market's trying to feel out what's the final yield. And then you've got demand issues as well. How much is China going to take? There was a news story out this morning or overnight that, in the month of August, China took way more Brazilian beans than they did a year ago and way less U.S. beans. That doesn't necessarily have to mean that that's the trend, but, the market's a little bit nervous about Chinese demand, obviously with COVID there and these financial issues they're having. And so there's a lot of turmoil right now, and that leads to choppy, volatile markets like we've seen. Last week we started off with a tremendous rally in corn and wheat, and market bounced 30 plus cents off the lows in corn, and then outside market volatility hits and the dollar rallies, and we give up a lot of those gains by the end of the week. So this volatility is going to continue, I think, in the short run.
Yep. Let's talk about cattle and hogs here for just a little bit and what you see happening there. Cattle and hogs both have had their turmoil here of late, but they're very choppy in both directions. So I guess talk about what you see happening in both those sectors.
Yeah, really, we've talked about this before. It's really kind of the exact opposite in the case of comparing cattle to hogs. In the case of cattle, it's pretty well publicized and well-known drought that the western, northern plains and far west has seen. Some of the worst pasture conditions that we've seen ever, maybe, or at least for a long, long time. A lot of heifer and cow liquidation, and with that, you would logically expect out in front of us that the numbers are going to shrink, and that's going to be friendly. But the market kind of has that built in, right? That I think some of those additional, amounts of cow slaughter that we've seen has kind of held back the cash market a little bit. So you got the front end of the market here struggling to kind of be in the 122, 123 range in the October live cattle. And, that's where the cash is. But the deferreds, you look out there in February, April are up in the, over 130 into the mid 130s. So they're kind of forecasting better moves out there. So it's going to be hard. Not that we can't see that, but they've already got it somewhat priced in. The exact opposite in hogs. You've got, the lean index here, just in the last week or so, kind of broke back under 100. And you've had the October lean hogs at a $16 to $18 discount to the lean index. And you finally started to see, the October and even December hogs bounce a little bit because they're so far under. They're pricing in bearishness out there into the third and fourth quarters, which is normally what we typically see bigger numbers out there in the hog market. So, it's interesting because on the one hand, on the cattle side, the market expects bullish things way out ahead of us into winter and spring, and they're pricing that in. And now we're going to have to see that materialize to hold those big numbers out there. And it's the opposite in hogs. They almost priced in possibly too much bearishness. And if we can see these, the lean index and the cash market stabilize a little bit, then the deferred lean hog futures are way too low, and they'll come snapping back. So very interesting dynamics in the livestock markets, and again, the outside markets are going to influence us today for sure. I wouldn't think it's going to do the cattle market any favors here with what's happening in the outside markets and the commodity world in general. But bigger picture, we should be seasonally at a time frame where you get into the tail end of the year here and into winter, that better things start happening. And you can kind of argue that maybe the numbers start shrinking a little bit and we start getting a little more bullish out there. But it's somewhat priced in because we're $8-9 ahead of where the cash and October live cattle futures contract is currently sitting. So interesting dynamics there.
Yep, absolutely. Well, a lot of stuff going on here, Chip. There's a million moving parts and a lot of news to pay attention to, and all that affects your plan. So if folks are working on a plan or just starting to go down the path of building that plan for what's coming up here in the next year's marketing plan, what's the best way to get a hold of you and the guys over there at Blue Reef?
Yeah, best way is just call our office. It's 309-550-7213. And that's a great point, Casey. We didn't even talk about that. We could do a whole podcast on that. This input thing for 2022 is just going haywire. And so it's more important than ever to have that plan out there. $5 December 22 corn futures looks good on paper, but boy, if you've done much investigating or pricing actual inputs, nitrogen and fertilizer for next year, it's haywire, and it's definitely going to affect things.
And the scary thing about that, Chip, right now, I mean, it's crazy now. I can't imagine what it's going to be like come, December, January, February timeframe. It just these shortages and these logistical challenges that we're having right now are just pounding everything that we have here in the United States as far as supply chain goes.
Yeah, there's no question. And it's I read a story here recently that a couple smart people saying that's probably 12 to 18 months at a minimum before that kind of gets back to normal, whatever normal is again. And so it's not going to be a 2-week fix. I read recently there's 60 some container ships waiting to unload at the port in Los Angeles. So we got some big issues out there.
Yeah, we have some very big issues that we need to overcome. And it's just about the time you think we saw that crazy thing about this, like during the shutdown, ag had a really good run. We had a lot of good things happening. It feels like now we're kind of getting that backlash that a lot of other industries felt during the shutdown. So it's a tough place to be right now, especially in it, like you said, it's 12 to 18 months out, and you just got to pay attention to what you have and work on that plan. All you can do.
Yeah, absolutely. And having that plan is important. I really think it could really affect corn acres negatively, and maybe negatively meaning less corn acres and possibly more bean acres. I have people in Illinois and Indiana already talking about that, right? On good, 230, 40 bushel corn ground. Hey, I'm going back to beans on this, or more beans. And so if they're talking about it right now in the I states, this thing it's we haven't even heard the last of it or even the start of it. So it's definitely going to be something that you want to plan for and be nimble around as far as these inputs go.
Absolutely. Well, thanks, Chip, for being on the podcast, man.
You bet. Talk to you soon, Casey.
All right, great. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also, go to MovingIronLLC.com, and you'll find all the latest editions of the Moving Iron Podcast, the entire catalog of the Moving Iron Podcast, and blogs as well. So with that, I am Casey Seymour, Chip Nellinger. Let's move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to agmarkets.com.
Moving iron in the 21st century.